We're going to talk about financial advisors today. And the problem with the term financial advisor is it doesn't actually mean anything, right? Just about anybody can call themselves a financial advisor. But you got to get into the details, figure out how they're being paid, how much they're being paid, what kind of advice they're giving before you say, well, this is somebody I want to trust for financial advice. I have interactions with financial advisors all the time. Some of the most fiery ones come as comments on the blog. In this case, this was a comment on the show notes for a podcast we ran not all that long ago. We ran it at the end of May. And I got a comment on there from someone who considers herself a financial advisor. And she wasn't very happy with me. She said, maybe you should learn more about annuities before you spout off about them. No annuity pays a 10% commission. The average is a little over 5%. And goes on and on and on and on, tells me how I don't know anything about asset protection, and tells me that I should learn more about the products I'm trashing before I put my foot in my mouth again. So I said, well, shoot, if you're dumb enough to leave your real name as a comment on my blog, like I'm going to look up a little bit about you. So I did. So somebody that's been in the financial services industry for about 20 years. First started at a company called Waddell and Reed. Now, if you've never heard of Waddell and Reed, count your blessings. Mutual fund expense ratios tend to approach, 2%. Then this advisor went to Raymond James. Not exactly, the Vanguard, Fidelity, Schwab type of, place. Let's put it that way. And now at another firm. So I looked up that firm's ADV2. They charge wrap fees. Okay, if your advisor charges a wrap fee, you need a new advisor. All right, this is a rip-off method. Pretty much should never be used. In fact, there was 9 pages in their ADV2 about fees. How much do you need? I don't know, half a page, right? Just enough to explain how your fees work. But they got so many fees, it takes them 9 pages to explain them. They charge an AUM fee of as much as 3%. They routinely start at 2.5%, right? They charge wrap fees. They're charging commissions. They're selling crummy products, and they're charging 2.5% AUM fees. I mean, it's a ripoff. They're giving lousy advice. They're giving, and they're charging way too much for it. And then she comes on my blog and gives me a hard time because I said, apparently on the podcast, that annuities can pay commissions up to 10%. Well, I looked it up again. They range anywhere from 1%, which is, like the very best immediate annuity type thing, to as much as 8%. So I guess the correction was needed. They don't pay 10%, they pay up to 8%, but it's really not relevant. But I thought this was a good example to talk about the kind of financial advisor you do not want. And these are fee-based advisors. They charge commissions and they charge fees. And what happens is you can't tell which hat they have on at a given time. Are they wearing their salesperson hat? Are they wearing their advisor hat? And you can't tell. It's all sounds like it's coming from the same person. And meanwhile, you end up with crummy insurance products. You end up with crummy investments. You end up paying way too much in fees. You grow your wealth way too slowly. And it's embarrassing. I'd be embarrassed to be an advisor like this, right? I don't know how you look yourself in the mirror at the end of the day, knowing you're charging 2.5% AUM fees and putting people into loaded mutual funds with expense ratios of 1 or 2% and actually feel like you're doing people a favor. You're not. So I told this lady, I wasn't particularly kind in my replying comment, right? I said, you're a sales agent masquerading as an advisor. I looked up your history and it's not pretty. And I kind of went through the history that I mentioned to you. And I said, clearly, you are not the target audience for this blog. You are its subject. So I really don't care what you think about what I write. Quit selling people crap they don't need and certainly don't want once they understand how it works and pretending it is some sort of unbiased financial advice. If I had my way, your firm would have 0 clients. I hope you go out of business ASAP. So anyway, if you have an advisor that is doing that sort of a thing, you need to get a new advisor, right? The people on our recommended advisor list, They didn't like it when we came out with an online course in 2018 titled Fire Your Financial Advisor. But they got over it because they realized I wasn't talking about advisors like them when I'm talking about firing your advisor. Yeah, some of you are hardcore do it yourselfers and you'll fire advisors even like the good ones on our list, and that's fine, perfectly fine. When I'm talking about advisors that need to be fired, I'm talking about people like this lady. This person should have no clients, charging 2.5% AUM fees, right? And selling you crappy loaded mutual funds and crappy annuities and pretending they're helping you. They're not helping you. They're just ripping you off. So if you have an advisor like that, fire them. Okay. If you need an advisor, get a good advisor. We got a whole list of them. If you don't need an advisor, learn how to do it yourself. Need a little help with that? Our Fire Your Financial Advisor course can help you. These sorts of people need to be run out of business. They either need to change their business practices and become real financial advisors, or they need to be run out of business. And that's just the way the financial services industry is. And I make no apologies about that.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.